Hello viewers, welcome to my channel. I'm Hashim Ali Khan. Already we have completed 11 problems on computation of tax liability. The present subject is income tax 1. So previous videos I have explained you the detail regarding the Income Tax Act 1961 introduction part. So already 11 problems we have done on computation of tax liability. Now in this video I'm going to start the 12th problem. So all the problems are based on the provisions of Income Tax Act, which I have explained in the beginning videos. So without watching the earlier videos, if you directly join this video, you may not be able to understand. So my suggestion to the viewers, genuine students who want to get a good grasp on the subject, to please watch the earlier videos. I have uploaded 5 videos on introduction, explaining in details how to compute the tax for the assessment year 2021. So if you have not watched the earlier videos, I suggest you to go to the playlist of my channel, select the subject Income Tax 1 assessment year 2021 and watch the earlier videos. Then only you come to this video. You can definitely enjoy doing the problems on Income Tax Act. So before starting the problem, I expect my viewers to have a printout of the problems which I have provided in the link under my description. So before watching, take a printout and keep it ready. Now I'm reading out the 12th problem. For the previous year, 2019-20, our current previous year is 2019-20, assessment year is 2021. The income earned during previous year will be put to tax in assessment year. Mr. Suresh income in India is 4 lakh, 8 lakh 40,000 and in foreign country 15 lakh. Calculate tax liability in the following situations. If his residential status is resident. Second, if his residential status is non-resident. So under two different situations, we have to compute the tax liability of Mr. Suresh. He is having two incomes, Indian income and foreign income. That is the problem. Now see carefully. Computation of tax liability of Mr. Suresh for the assessment year 2021. Indian income is 8 lakh 40,000 given in the problem. Foreign income 15 lakh given in the problem. The total income Indian and foreign combined is 23 lakh 40,000. Now we have to find out the tax liability under two different situations. The first case is if his residential status is resident. In the theory session, I have explained you in detail that if a person's residential status is ordinarily resident, then he is put to tax on his global income. That means wherever throughout the world, wherever he earns the income, he has to pay the tax in India if his status is ordinarily resident person. So here in our problem, we have to take the first case. If his residential status is resident, ordinarily resident, then he has to pay the tax on global income, the total income, both Indian income as well as foreign income. So in this case, he is liable to pay tax on both the incomes, that is Indian income and foreign income, 23 lakh 40,000. Now slab system. Assuming that the SSC is non-senior, below 60 years, the 4 slabs will apply. The basic exemption limit is 2 lakh 50,000 for non-senior citizen. So first slab up to 2 lakh 50,000, income is 2 lakh 50,000, tax rate nil, income tax nil. Rate is nil, income tax is nil. Second slab from 2 lakh 50,000 1 rupee to 5 lakh. That means from the second slab is up to 5 lakh. Deduct the first slab. First slab is 2 lakh 50,000. So 5 lakh minus 2 lakh 50,000. The second slab is 2 lakh 50,000. 2 lakh 50,000. Or in other words, 5 lakh minus 2 lakh 50,000, 2 lakh 50,000. Second slab 2 lakh 50,000, the rate of tax is 5%. So 2 lakh 50,000, 5%, 12,500. The third slab goes from 5 lakh 1 rupee to 10 lakh. 5 lakh 1 rupee to 10 lakh. The income will be 5 lakh. On this 5 lakh rupees, the rate of tax is 20%. So 5 lakh into 20%, 1 lakh is the tax. Now the fourth and final slab, over 10 lakh, 30%. This is the final slab. Over 10 lakh is 30 lakh. So we'll take the balance. What is the total income? 23 lakh 40,000. From 23 lakh 40,000, first we deduct the three slabs. What are the three slabs? 2 lakh 50, 2 lakh 50, 5 lakh. So 250, 250, 5 lakh. Combined together 10 lakh. So 2340 minus 10 lakh, 13 lakh 40,000. This is the balance. On this 13 lakh 40,000, 30% is the tax. 4 lakh 2,000. Take the total. 5 lakh 14,400 is the tax on total income. On this tax on total income, we add health and education cess 4%, 20,580. The ultimate tax liability 5 lakh 35,080. See here, there is no tax rebate because the total income is more than 5 lakh rupees. Secondly, no surcharge because the total income is less than 50 lakhs. That's it. Now, second case, if his residential status is non-resident, if a person is non-resident, he is liable to pay tax only on Indian income. Foreign income is not taxable for non-resident persons. Already I have explained you in detail in the previous theory video. So for non-residents, only Indian income will be taxable. Foreign income is not taxable. So in this case, only Indian income is taxable, foreign income is not taxable. Indian income is 8,40,000. 8,40,000 Indian income. Now again we apply the slab. First slab up to 2,50,000. 2,50,000. Income 2,50,000. Rate nil, tax nil. Second slab 2,50,000 1 to 5 lakh. So 2,50,000 1 to 5 lakh. The income is 2,50,000. Rate of tax is 5%. 12,500. The third slab is 5 lakh 1 to 10 lakhs, but our income is not going up to 10 lakhs. Our income is at 8 lakh 40,000 only. So we will take the balance. We'll take the balance. So 8 lakh 40,000 is the total minus first slab 250 minus second slab 250. So 8 lakh 40,000 minus 5 lakh. You will get 3 lakh 40,000. 8 lakh 40,000 minus 5 lakh, you will get 3 lakh 40,000. On 3 lakh 40,000, 20%, 68,000. So total will be 80,500. Tax on total income 80,500. To this we add health and education cess 4%, 3,220. Tax liability 83,720. This will be the case if his residential status is non-resident. If he is resident, 5 lakh 35,080. That will be the tax liability. That's it. This is the end of problem number 12. Now, see the 13th problem. Mr. Mangesh, age 84 years. 84 years means super senior citizen. 80 and above. 80 and above will be super senior. For super senior citizen, the basic exemption limit is 5 lakh rupees. These are all the provisions which I have explained in the previous videos. That's why again and again I am saying, don't skip the theory videos. That are the foundation stones for doing the problems. So basic exemption limit for super senior citizen is 5 lakh. Now we'll apply 5 lakh. Mr. Mangesh, age 84 years, income for the previous year 11 to the current assessment year is income from other sources 6,25,000 and long-term capital gain 1,90,000. Calculate tax liability. He is having two incomes, long-term capital gain and income from other sources. Long-term capital gain is a special income on which there is a flat rate of tax 20%. 20% is the flat rate of tax on LTCG, and income from other sources is a normal income on which slab system will apply. So we cannot add up both the incomes. Separately we have to calculate the tax on LTCG at 20% flat, and on other sources we apply the slab system. That is the provision, right? Now, computation of tax liability of Mr. Mangesh for the assessment year 2021, age 84 years, so super senior citizen. Long-term capital gain is given in the problem 1,90,000. Income from other sources is given 6,20,000. So 6,25,000. This is a normal income. First, we calculate the tax on normal income. The tax on normal income, slab income rate tax. First slab up to rupees 5 lakh because the SSC is a super senior citizen. Up to 5 lakh, income 5 lakh, nil, rate nil, tax nil. The next slab will be from 5 lakh 1 rupee to 10 lakhs. Next slab will be 5 lakh 1 to 10 lakh. But our income is not going up to 10 lakh. Our income is only 6 lakh 25,000. So we'll take the balance. I'm taking the balance. I'm not writing 5 lakh 1 to 10 lakh. Because our income is not going up to 10 lakh. Our income is only 6 lakh 25. So from 6 lakh 25,000 deduct 5 lakh, 1 lakh 25,000 is the balance. And the rate is 20%. 20% is the rate of tax. So multiply 1 lakh 25,000 into 20%, 25,000 is the tax. This 25,000 rupees is the tax on normal income. So tax on normal income, not total income. I'll write down here, tax on normal income is 25,000. To this we add tax on LTCG, long term capital gain, flat rate 20%. 20% of 1,90,000, 38,000. So 25,000 plus 38,000, 63,000 is the total tax, on which health and education says 4%, 2,520. So tax liability is 65,520. That's all. So this is the end of problem number 13. Come on, now we'll start the next problem. That is problem number 14. 13 problems already we have done. 14th, Mr. Reddy's income details are income from business 8 lakh and income from long-term capital gain LTCG on listed equity-oriented mutual funds. Security transaction tax is paid is 3,10,000. Calculate tax liability. See here again. The new provision is, you have to remember here. Income details are income from business. Income from business is a normal income. Slab system will apply on this 8 lakh rupees. But LTCG, in the previous problem we have seen LTCG is taxable at a flat rate of 20%. But there is one provision regarding the LTCG on transfer of equity oriented mutual fund units. Mutual funds will issue units just like shares. So different category of mutual fund units are there. One of the category is equity oriented mutual fund units. So Income Tax Act says if an SSC has sold equity oriented mutual fund units and earned long term capital gain, that will be exempted up to rupees 1 lakh. Up to rupees 1 lakh. The excess is taxable at a flat rate of 10%. This is the new provision. First time we are coming across. Remember. So any long-term capital gain arising on the transfer of equity-oriented, remember the wording, equity-oriented mutual fund units. Equity-oriented mutual fund units, and on which security transaction tax is paid, STT that is called. So any transaction which is conducted in a stock exchange, in the securities are listed, then STT will be paid. Security transaction tax will be paid. So any long-term capital gain arising on the sale of equity-oriented mutual fund units on which STT is paid, it will be exempted up to rupees 1 lakh. The excess will be taxed at a flat rate of 10%. So in our problem, Mr. Reddy's income from business is 8 lakh. On this 8 lakh rupees slab system we apply. But on income from long-term capital gain on the sale of units of equity-oriented mutual fund and on which security transaction tax is paid is 3,10,000. It is given 3,10,000. But up to 1 lakh rupees exempted, remaining 2,10,000 is taxed at a flat rate of 10%. That is the provision. Now see, computation of tax liability of Mr. Reddy for the assessment year 2021. Income from business 8 lakh, LTCG on listed equity oriented mutual fund, STT is paid. STT stands for Security Transaction Tax. And this STT will be applied whenever transaction is conducted in a stock exchange. In a stock exchange. So STT paid 3,10,000. These two are the incomes the SSC is having. Now LTCG on equity oriented mutual fund on STT paid will be exempted up to rupees 1 lakh. This is the provision you have to remember. Up to 1 lakh rupees exempted. The excess is taxable at a flat rate of 10%. Now income from business is a normal income. So tax on normal income up to 2,50,000, income 2,50,000 nil, no tax. Then 2,50,000 to 5 lakh, second slab, 2,50,000 1 to 5 lakh. The income is 2,50,000, tax rate 5%. So 2,50,000 5%, 12,500. Now the next slab is from 5 lakh 1 to 10 lakh. 5 lakh 1 rupee to 10 lakh. But our income is not going up to 10 lakh. Our income is only 8 lakh. So we will take the balance. We'll take the balance. Third slab will take the balance. So 8 lakh minus 250 minus 250 minus 5 lakh. So 3 lakh remaining. On 3 lakh 20%, 60,000. Add up 82,000. It is not 82, it is 72,500. 72,500. So I'll make it 72,500. So 72,500 plus 21,000. It is 93,500. 93,500. On 93,500 we'll calculate the tax. 60, 70, 72,500, right? So how much? 72,500 plus 21,000. That comes to 93,500. 789, 93,500. It is correct, 93,500. Then 93,500 into 4%. 3,740. 3,740. Now add up 3,740. You add up plus is equal to 97,240. This is the tax liability. So again I repeat, tax on normal income. Normal income is 8 lakh rupees up to 2,50,000 nil. Second 2,50,000 5%, 12,500. Now balance 3 lakh. On 3 lakh 20%. 3 2 is 6, 60,000. 60, 70, 72,500. Correct. Tax on normal income 72,500. Tax on LTCG 10% of 2,10,000. Out of 3,10,000, 1 lakh rupees exempted. Remaining 2,10,000, 10%, 21,000. 93,500. On 93,500, 4%, 3,740. 97,240 is the tax liability. That's it. This is the end of problem number 14. Now problem number 15. Mr. Ashok, a citizen of India, left to Japan on 2nd February 2020. Determine his residential status as resident or non-resident for the assessment year 2021. So he is an Indian citizen living abroad. The previous theoric video I have explained you in detail. Special category. 3 types of special category assessees are there. Those Indian citizens who are living abroad on employment basis. Living abroad on employment basis. Then in that case only first basic condition will apply. The first basic condition is 182 days or more he must stay in India, then only he will be treated as resident. If first basic condition is not satisfied, he will be non-resident for special category persons. Special category persons, first special category, an Indian citizen living for abroad on employment basis. अब अगर ऐसा पर्सन है तो उसको only first condition, first basic condition 182 days will apply. Second basic condition will not apply. Similarly, second special category, an Indian citizen who is working abroad comes to India on visit. In that case, again, special category, first basic condition will apply. Similarly, an Indian citizen working as a crew in a ship or aeroplane, then in that case, again, it is a special category. So, in these 3 special category persons, only the first condition, first basic condition will apply 182 days. अगर 182 days during the previous year India में है तो वो resident, otherwise non-resident. So in our problem, Mr. Ashok left for Japan on 2nd February 2020. 2nd February 2020 he left for Japan. So during the previous year how many days he has stayed? Previous year 2019-20. Our current assessment year is 2021. The previous year is 1920. Previous year 1920. So it will begin from 1st April 2019 and ends on 31st March 2020. This is the previous year. Now we have to calculate how many days he has stayed in India during this previous year. The Mr. Ashok, citizen of India, left to Japan on 2nd Feb 2020. Number of days he stayed in India during the previous year. Now we calculate. He left for Japan on 2nd Feb 2020. So before 2nd Feb 2020, he was in India. So how many days he has stayed? April. April, how many days are there? 30 days. April 30 days. May 31 days. June 30, July 31, August 31, September 30, October 31, November 30, December 31, January 31, February 2 days. Because 2nd February he left. So we include 2nd February in India only. 3rd February he was not in India. He was in Japan. He was in Japan. So in February only 2 days he stayed in India. Now if we add up all, it will come to 308 days. That means during the previous year 1920, Mr. Ashok stayed in India for 308 days. That means it is more than 182 days. First basic condition is satisfied. More than 182 days he stayed in India. So he is a resident during the previous year 1920. So during the previous year 1920, Mr. Ashok is a resident because he satisfies the first basic condition. The assessee satisfies the first basic condition, that is he stayed in India during the current previous year for more than 182 days. 308 days he stayed. So he is a resident. Mr. Ashok is a resident for the assessment year 2021. Assessment year 2021, previous year 1920. That's it. This is the end of 15th problem. Now see the 16th one. Srimati Asma Begum, citizen of Iran, came to India for the first time on employment purpose on 13th July 2019, 11 a.m. First time, she is a foreigner, she is not an Indian. She first time she is arriving to India on employment basis. When she arrived, 13th July 2019. Our previous year will begin from 1st April 2019. Ends on 31st March 2020. Now during this previous year, we have to calculate how many days she stayed in India. So on 13th July 2019 she came. She left India on 5th January 2020. In July 2019 she came. On 5th July 2020 she left for Iran. During the period she earned 18,60,000 in India and 25,91,000 in Iran. Determine her residential status and calculate the tax liability for the assessment year 2021. See here. For determining which income is taxable, incidence of tax. If she is a resident, then she is liable to pay tax on the whole of income, Indian income as well as foreign income. Both incomes are taxable if she is a resident during the previous year. If she is a non-resident, then she is liable to pay tax only on Indian income. Foreign income is not taxable. So we have to decide whether during the previous year she is a resident or non-resident. That we can find out only by calculating the number of days. Number of days she stayed in India. Determination of residential status and tax liability of Srimati Asma Begum for the assessment year 2021. Current previous year 2019-20. So from 1/4/2019 to 31st March 2020. This is our current previous year. Now we need to calculate how many days she stayed in India. Number of days she stayed in India during this period is July. On July 13th she came. July 13th, 2019, she came to India at 11 a.m. That means first 12 days of July she was not in India. On 13th July she arrived in India. So July consists of 31 days. July consists of 31 days. Out of those 31 days, 12 days she was not in India. So deduct 12. So 31 minus 12, you will get 19 days. 31 minus 12, you will get 19 days. So July 19 days she stayed in India. So I have taken July 19. Then after July, August 31, September 30, October 31, November 30, December 31. She stayed in India. And July 5th, 3 p.m. she left India. January 5th. January 5th, 3 p.m. she left India. That means 5 days of January she stayed in India. January, 5 days. So these are the number of days during the previous year she stayed in India. If we calculate the total, it comes to 177 days. 177 days during the previous year she stayed in India. Now we check the basic condition. The first basic condition says she must stay in India for 182 days or more. She is not satisfying the first condition. First condition is not satisfied. Right? Second basic condition says stay in India for 60 days during the current previous year and 365 days or more during the 4 years preceding the relevant previous year. So during the previous year 60 days, okay, she has stayed for more than 60 days. But during the 4 years preceding the previous year, she must stay for 365 days in India. She has not. First time she came to India. During the current previous year, first time she came to India. That means she cannot satisfy the second condition also. So SSC not satisfying the first basic condition. SSC not satisfying the second basic condition. So she is a non-resident. The SSC does not satisfy any of the basic condition since she came to India for the first time. Her residential status during the current year is non-resident. Current year is non-resident. So if she is a non-resident, only Indian income will be taxable, foreign income is not taxable. So she earned some 25 lakh 91,000 in Iran. 25 lakh 91,000 rupees she has earned in Iran. That is not taxable in India because she is a non-resident. Only Indian income is taxable. How much Indian income? 18 lakh 60,000 she earned. So 18 lakh. For non-resident SSC, only Indian income is taxable. Foreign income is not taxable. Indian income 18 lakh 60,000. Income. First 2 lakh 50,000 nil. Second 2 lakh 50,000, 5%, 12,500. Next third slab 5 lakh. The third slab is 5 lakh. On that 5 lakh, 20%, 1 lakh. Now balance. Fourth slab will be the balance. So total income is 18 lakh 60,000. 18 lakh 60,000 minus 2 lakh 50 minus 2 lakh 50 minus 5 lakh. So remaining 8 lakh 60,000. On 8 lakh 60,000, 30% is the tax rate. 30% of 8 lakh 60,000, 2 lakh 58,000. Now take the total, 3 lakh 70,500 is the total tax on Indian income. To this we add health and education cess 4%. So 4%, 14,820. Total tax liability 3,85,320. This is the tax liability of the SSC Srimati Asma Begum for Indian income because she is a non-resident. And the basic exemption for non-resident SSC is 2,50,000 for all types of SSCs, that is non-senior, senior or super senior. For non-resident SSCs, any type of non-resident SSCs, the basic exemption limit is 2,50,000. That's why I have given 2,50,000. That's it. So this is the end of problem number 16. So totally 16 problems I have explained you in detail regarding the computation of tax liability and residential status. So if you are satisfied, if you think that these videos are very beneficial, knowledgeable, so give a like to the video, share it in your group, in your friend circle, so that more students can watch the video and gain the knowledge, and give your comments, feedback. And lastly, don't forget to subscribe my channel if you have not yet subscribed. We'll continue the next problem in the next video.